Good morning, happy Wednesday. It's the 19th of February. I'm Hamish Wilkinson, back for another day, and this is Kiwibank's Markets in a Minute. Right, a little bit to cover off today. Just when it seems safe to dip the toes back into the coronavirus clouded market, and what perhaps is an early official confirmation of the financial impact from the ongoing outbreak, market behemoth Apple reported yesterday that it is unlikely to meet its first quarter revenue guidance numbers as a result of a double whammy hit of reduced sales and production levels across China, thus restricting expected global revenue numbers. Whilst not providing an updated guidance range, when you start out with an expected range of circa 63 to 67 billion, that is a spread of 4 billion, even coming up just a few dollars short of the lower end of that range is a pretty big impact. Putting that another way, say if the actual number comes out just a small 3 billion below the lower end of that range, then that would equate to a hit of somewhere between circa 5 to 13% of New Zealand's GDP output on an annualised basis. So not that insignificant really. So with a stale Apple not providing too much of a juicy bite, equities, particularly tech related, have run with the sour theme overnight. Asian and European indices mostly all finished up between 0.5 and 1.5% lower, whilst the major US indices, remember playing catch up from yesterday, are somewhere between 0.5 and 1% lower in current trading. Closer to home, the New Zealand dollar has taken direction from an RBA minutes-induced Australian dollar sell-off yesterday afternoon and a weak overnight global dairy trade milk auction result. Minutes from the RBA's meetings early in the month were a touch more dovish than initially thought, commenting that a rate cut was actually considered, but the RBA backed away in order to prevent any renewed encouragement in the housing market, which coincidentally is perhaps starting to be reflected on our own housing market, shown by the buoyant release of yesterday's REINZ numbers for January, of which I'll provide a link below to the Kiwi Economics Update review of the numbers. What else? Milk auction. Both whole milk powders and prices and volumes were sold at last night's auction were lower. I'll also attach a link to those results. So with a general risk-off theme combined with a soft Australian dollar and some sour milk prices, the Kiwi this morning is now sitting below 64-cent level mark versus the US dollar, lower by around about 0.7% from the same time yesterday, and in the mid 95 cent region versus the Aussie, having traded up to 96 cents on the back of the RBA minutes release. Right, that's it for me. Mike is back on deck tomorrow. Normal transmission resumes. Ka kite.